Hello and welcome back to Chart Wrap by True Options Masters. I'm your managing editor, Mike Merson, and we're here as always to go through the spiciest charts I uncovered for you in our daily e-letter. If you're not already subscribed to True Options Masters, my cat is telling you right now that you should be. You'll just want to go to True Options Masters, give that a Google, sign up for the newsletter. We're giving you fresh daily options insights every single weekday and every weekend as well, because we have Options Arena going out the door, and you're going to want to look forward to the one coming out tomorrow. It's on a very hot asset right now. I'm not going to spoil it. We might talk about it in today's episode. Who knows? Also, if you're watching this on YouTube, well, I know you're watching this on YouTube. That's the only way you can watch this. Be sure to like, subscribe, comment, notification bell, all of the things YouTubers ask you to do when you watch their videos. Yes, I'm asking as well, because it supports the channel. It supports True Options Masters' mission to be the greatest options trading newsletter, website, YouTube channel in the entire universe, and we are well on our way thanks to you. Thanks a little bit to me, but mostly to you. And without further ado, let's get into the charts already. It's this maniac screaming at you. We don't need this. Okay. It's been kind of a rough week, folks, hasn't it? A lot of stuff is looking really weak. Stocks, weak. Crypto, I'm going to say probably in a bear market at this point. But there are some standouts. There are some outliers of things that are popping. Things that are doing their job. And with that in mind, I want to start looking at silver here. So silver is one of my heaviest bags that I hold. I initiated a position in junior silver miners. The junior silver miner ETF, which the ticker escapes me right now, but that's not what we're looking at. We're looking at actual silver here. Junior silver miners are going to be like more of a leveraged bet on silver. But the reason I'm bullish on silver is because silver is kind of a leveraged bet on gold. And while gold hasn't done its job super well in this inflationary environment, that is what it has historically protected people from for not decades, not hundreds of years, literally thousands of years people have used gold to trade and transact. I don't think that's going away. I think Bitcoin is definitely going to eat some of gold's lunch, but I don't think gold is going anywhere. It will outlive you and me and my crazy cat. So with all that in mind, let's finally look at the silver chart. The silver chart has been honestly looking a lot like the Russell 2000 chart, which we will talk about a little bit later, in that it's just it had this nice pop, and it's just traded sideways for much of the last 2 years. But there is a little ray of hope for silver bulls, myself included. We have bounced off this kind of shoddy rising support line. Yet again, we've put in a higher low, and now we're coming up against this falling resistance line once again, with the weekly actually peeking its head outside of it. And if we bring it down to the daily time frame, we can see that we're still kind of above this long-term resistance, and we might be coming back in to retest it. We failed to do that here. We rejected off it, rejected twice here. Well, this was just establishing it. And then also we've mostly adhered to this very long-term horizontal support for silver. So what does all this mean? It's a little early to get overly bullish silver right here, in my opinion. I think you want to wait until we breach this downtrending resistance and this much longer term downtrending resistance line. But you can see we're forming not the cleanest bull flag I've ever seen, because normally you want like a big bullish move off of an already trending asset to see a bull flag, but this is at the very least a symmetrical triangle. We can look at the long-term momentum indicators. Let's bring it up to the weekly again and see what we can work with. I mean, it's just stayed oversold for much of the last few months. Very coiled. And we're seeing the RSI at neutral too, so really not a whole lot to talk about. If you think inflation will persist, if you think the Fed is not going to be able to hike rates as much as it wants to fight inflation, which is a possibility. Because we see how the equity markets are doing. And what did the Fed do the last time the equity markets dumped? They cut interest rates. So we're going to see how much this raising interest rate campaign actually lasts. But precious metals, they're going to be a protector of wealth. They may not appreciate in capital in a way that cryptos and stocks might do. But in downturns, times like now, you want a little gold exposure. You want a little silver exposure. And yes, you want a little Bitcoin exposure too. Not as proven of a store of value, but I think we're going to be talking about Bitcoin for a long time. So this is just what I'm seeing in the silver chart. Bulls are showing up. If we could push through this downtrending resistance line, I should probably point with my cursor, not my finger. That's not helping you much. And then if we could breach past this, I mean, that looks like a really nice breakout to me. And then we have much, much higher highs to potentially look forward to. Because, I mean, clearing this, you're looking at the action back from 2011 to 2013, which was when silver went as high as, I mean, almost $50, which would be very, very good for silver bulls like myself. That's a double from here. This is a chart to watch. Silver's in a really boring story the past couple of years, but I think silver bulls are going to have their day. I really do. Speaking of bulls having their day, let's move on to oil. So this isn't oil so much as the energy sector, but I got to pat myself on the back here. On Monday, this candle, we breached this very long-term horizontal resistance. This is a level that we hadn't seen since before the pandemic started in 2019, okay? And really, oil was kind of trending down before the pandemic, before absolutely tanking and going negative at one point in 2020. But that's beside the point. We're back here. And I knew that this one-way up action that we saw over the past month or so, there was no way we weren't going to meet some resistance at this horizontal. And so I told you in my chart of the day on Tuesday, it's time to sell energy stocks. And look where we are today. We are a modest, I'll come from the close of that day, to be conservative. We're a modest 3%, as low as almost 5% off that high. So if you traded this move because of me, I want you to let me know. Send me a comment down below. Email us at trueoptionsabandonhill.com because this wound up being a really great trade. So what happens with oil next, right? I think oil demand is going to be strong on a long-term macro basis through this decade. And here's why. The world's clearly not ready for nuclear. We are still shutting down nuclear plants. No matter what you think about that, I personally think it's a dumb idea. I think nuclear is our best bet at a clean energy future. But the powers that be don't agree just yet. So we're going to rely on oil, not just for fuel, but for things like creating plastics and lots of other manufacturing uses. So if you want to trade oil, it's likely to be very volatile, but I fully expect oil and other energy sources to rise in the coming years. So this is not, we're not going to see oil go negative again anytime soon, unless some real nonsense happens. But this is one to keep an eye on. I would be really disappointed to see us go all the way back to 57.90, but if we do, boy, I am going to be bidding on some oil stocks. XOM has a nice dividend. XLE is a great one to trade. This is just a great trade across the board. Let's move on to another commodity. This is Lithium Americas Corp. Now, I don't have a whole lot of markup on this chart. Maybe we could do one live here. Definitely got a pretty clean downtrend happening. And we can maybe pick it up from here. And, we might have a little bit of a wedge coming together. Let's see what the momentum indicators are telling us. Pretty oversold, but not really a whole lot to speak of. So lithium is down, what's that, 40% off its highs? Well, Lithium Americas is. I'm not sure about the actual commodity. Yeah, about 40% off its highs. Lithium is going to be required for these electric cars everyone's so jazzed about all of a sudden. Well, not all of a sudden, for the past 5 years. I think Amber was totally right in thinking you want to hold lithium stocks in anticipation of more EV demand. It's potentially I'll go out on a limb and say you might see higher gains from lithium this decade than you will oil. So this is definitely something to watch. This is more of a long haul trade for me. Full disclosure, I own some of this stock we're looking at right here. I have for a very long time, and I plan to hold it for a very long time. So do your due diligence, but I think you could obviously do a lot worse buying lithium stocks at these levels, or you could do worse buying them than where they are today. Worse being up here at this beautiful green candle, which just got annihilated. So lithium, another important commodity for the coming decade. Now this is the heartbreaker chart, folks. This is the one no one wants to see. This is small caps making new 52-week lows, breaking out of this confounding and frustrating channel to the downside, and boy, is there just no bid right now. It's a scary looking chart, and a lot of equity charts look like this. So, I tried to play a bounce in IWM somewhere back here. It didn't go so well. This is a tough one. Both Chad and Amber from the True Options Masters team, they think that small caps are going to go higher in 2022. I think it's still a possibility, especially with the Fed raising rates. That should potentially be, or Amber has an argument that that's potentially, and Chad, that it's potentially better for the small caps, especially the quality small caps, than it is for some of the really, really overbought tech names. So, I don't know. Right now, I got a lot of cash on the sidelines that I'm waiting to plug into some quality names. And if you haven't bought some of the names that Amber recommended in her prediction series, now might be a good time to deploy that cash. Now, are there any hints that this could be over? Well, the RSA, the RSI, and the MACD aren't being nice to us anymore. There was a potential positive divergence in the chart for IWM on the daily, but it's looking more like that was kind of a fake out divergence, because the MACD is now lower. At least the shorter term line is now lower than it was previously. The RSI it's slightly higher, but if we close weak today, it's probably going to revisit these lows. So I don't know. I hope you're not too exposed to small caps or any real stocks right now, or crypto, because it's really just a tough week for this sort of stuff. I do think that it would be really, really surprising to see everything just kind of fall apart here, considering, macro picture doesn't look too bad. Omicron was a relatively mild variant. Biden doesn't want to shut down the economy again. I mean, there's a lot to look forward to. It's just the charts are a bit confounding this week. So right now, I think the trade is in yield. It's in promising commodity setups: silver, gold, lithium, oil, etc. But yeah, this is the time to really start hunting for those high-paying dividend stocks. Rates are going up for real estate also, so that's going to weigh on sellers. They're not going to be able to price their homes quite how they have. I mean, that's a slow dynamic. That's not going to happen right away. That's not something to count on if you're looking to buy a home, but yeah, it's a complicated picture, folks. So just be very selective with your trades. You don't want to be putting on trades willy-nilly here. And you want to really kind of be looking for deals, would be my guidance. So speaking of deals, we didn't talk about the Ethereum chart this week, but because I didn't have a chart of the day on Friday, which is today for me, yesterday for you, I did want to talk about it just a little bit more. I have said before, I don't think publicly, that I think Ethereum is the trade of the decade. And what I mean by that is I think Ethereum will bring the most capital gains of any other asset through the 2020s. And there are many reasons why I think that. One of them being that it is the heart of the crypto economy. every innovation that's happening in crypto, it's built on Ethereum, or it's built on someone that's trying to copy Ethereum. All right? NFTs, decentralized exchanges, smart contracts. If we get to a point, and I want you to take a walk with me here, we get to a point where smart contracts are used in things like real estate purchases, trade agreements, where we can execute very complicated conditions through these automated contracts where we don't need middlemen anymore. I think that could be hugely bullish, not just for Ethereum, but for society at large. I mean, imagine the efficiency of using a system like this, if we can get it to scale. That brings me to the second thing. Ethereum is scaling. It's going to go to proof of stake this year, which is not going to bring down gas fees, just so you know. But it will reduce the energy cost, which is very, very important for the ESG movement. And it has EIP 1559, which, if you're not familiar with it, is a mechanism that essentially burns Ether with every transaction. So if we just pop over to ultrasound.money, which is a website that tracks Ethereum gas usage and how much of it is being burned, we can see that currently, because of EIP 1559, Ether is inflating at 0% per year, where before it was inflating at something like 2 to 3% per year. Now the merge refers to when Ethereum goes proof of stake. So let's simulate the merge, and we see that the Ethereum supply is going down by 4.2% per year. So we have a highly productive asset that's being used in this entirely new crypto economy. And in a few months, when the merge is expected to happen, somewhere halfway through this year, it will suddenly become a deflationary asset, meaning the supply will drop and demand will rise simultaneously. Yes, this is a speculation. But if you think Ethereum persists over the next 8 years, as I do, I don't understand how you can look at this and not see it as the trade of the decade. Now, with all that bold, I'll say, no, I won't say the bold P word. A few of you know what I mean, but, I'm just going to be safe on YouTube. We're going to keep it safe for work here. Out of the way, let's look at this awful Ethereum chart. We are back at the September lows for Ethereum after our initial recovery from the bear market that we saw in May. Now, can we hold the line? Can we hold this yellow horizontal line? I don't know. I think we might be in for a crypto bear. We've simply given up so much, and a lot of the people holding crypto right now are not institutions. They're individuals who don't exactly have the capital and the risk tolerance for a prolonged bear, so they're puking. They're puking their positions up. And if you're not in crypto, it's giving you a better opportunity to get some exposure to what I think will be the trade of the decade, Ethereum. If we hold this line, I'll be very, very happy, but that doesn't mean we're out of the woods. We have 2 pretty severe downtrends to cross. And if we bring it over to the Heikin-Ashi candles, which I've been introducing as a pretty good way to read uptrends and downtrends in the crypto market, let's just get rid of all my annoying drawings. We can see that Ethereum is still in a downtrend and likely will continue to be in a downtrend for quite some time. Just a refresher, we see trend changes in the Heikin-Ashi charts when we see these kinds of candles. Long upper wicks, long lower wicks, short, small candle bodies. Confirmed by a candle, the opposite color, a bullish candle or a bearish candle if it's a different sort of reversal. Right now, the price action is not telling us anything even close to that. Ethereum's in a downtrend, Bitcoin's in a downtrend. Most crypto assets are in a downtrend. So you want to bid carefully. But for the long term, I still love Ethereum. And I think if you just listen to Vitalik Buterin, the creator, talk for more than 5 minutes, you understand that he's in this thing to, his vision is a global world computer that can execute complicated financial transactions quickly, efficiently, without middlemen, immutably, and publicly. And I think that's just the future we're going to see. So I implore you, don't write this crypto thing off. It's not going away. It hasn't so far, or has it? And with that, I think we're going to wrap up Chart Watch, or Chart Wrap, whatever I call this thing. Thank you so much for watching. Bring it back to my intermission. There we go. That's what I call this camera. Yes, thank you for watching. Thank you for being a part of True Options Masters. If you haven't already, give it a like, give it a comment, give it a subscribe, give it a notification bell. Sign up for the True Options Masters e-letter, where you get to hear our Options Masters, Mike Carr, Chad Shoup, Amber Hessla, me, and Krista Morelli writing to you each and every week our best ideas, trying to give you the best options insights you can find in your email inbox. I hope you have an amazing weekend, and I will see you next week.